More importantly, though, it's clearly hard to figure out what the consumer's interested in or what she's willing to spend on. And you know what? Because of that in a nutshell is why I like stocks like Nvidia. It's why I come out here almost every night for the last, 5 years and recommend these mega cap tech plays. It's why I created FANG, for heaven's sake. It's why I don't care one whit about whether this market really broadens out or not. What am I supposed to do? Avoid the stock market's winners until we all start buying pools? Oh, that makes sense. Yeah, we should put all of our stock picking in the hands of pool aficionados. Should we just ignore it when we get incredible pullbacks in enterprise-oriented tech companies like Nvidia because of pool? Look, many people who spout about the market have a very different philosophy from me. I'm always trying to find, for you, the stocks of good companies that are doing great things and can continue to do great things regardless of the cash-strapped consumer, or the homeowner who stopped renovating, or the swimming pool that doesn't get built. On the other hand, I'm not drawn at all to stocks that may work or may not work if some Federal Reserve official says they may or may not cut rates. That puts me in a position where I have to tell you to own, not trade, but own some stocks that may at times move too high, as you could argue that Nvidia just did, or that Microsoft has done, or that Alphabet has done, or that Amazon has done, or Apple has done. I own them for the charitable trust because while I like to see I would love to see the market broaden out. I'm not going to help broaden it out myself with my charitable trust money. I'm not going to go into areas that are dependent on, say, the consumer, only to find out the consumer doesn't want that new pool.
Even as Nvidia recently lost hundreds of billions in market cap, CNBC's Jim Cramer talked about his long-standing faith in Nvidia stock, saying that investors should stick to the stocks of the best companies rather than invest in weaker stocks for the sake of giving more breadth to the market. Notably, Nvidia hit a $3.34 trillion valuation last week, surpassing Microsoft to become the largest company in the world. But the stock fell 13% in 3 days before starting to recover. Cramer said that investors should focus on finding solid companies that can perform despite a tough consumer or interest rate environment, highlighting that it is continually difficult to gauge consumer behavior. And he picked Nvidia as one of those companies. So, in today's video, we're going to talk about why Cramer is still bullish on Nvidia stock and why investors should actually follow his advice this time. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Consider the customers of Pool versus the customers of Nvidia. Pool Corp's customers have no idea if they should put up a pool to increase the value of their home because they can't find another house to move into anyway. The pool customer is strapped. The pool customer is mercurial. The pool customer might just prefer to swim in a pool on a Carnival cruise. The pool customer is probably worried about interest rates because, well, she might need a home equity loan to build a pool. But how about Nvidia? How about its customers? How about Amazon, Alphabet, and Microsoft? Perhaps 3 of the 4 richest companies in the world. Do these mega cap worries, do they look like they're worried about interest rates? Last I looked, companies that can pay cash don't worry about interest rates. They aren't all that concerned about the Cleveland Fed or the Minneapolis Fed or any of the other regional Feds like St. Louis or Philly any more than they probably care about the ice hockey teams that from those same city. No, check that. The execs at these companies probably care more about the ice hockey teams than the Fed officials because they can't buy the Fed officials, but they can buy the hockey team. Is the Nvidia customer mercurial? Can the customer walk away from Nvidia like a homeowner walks away from a Pool Corp deal? Are you kidding? If any one of these companies doesn't buy Nvidia's chips, the other guy will take everything that customer is going to lose. If Amazon today were to walk away and say, you know what? We're going to make our own chips, I think they'd end up falling so far behind in cloud infrastructure that their clients would clearly migrate to Microsoft Azure or Google Cloud in a heartbeat. They can't wait for Amazon to have a competitive chip. That'll kill their business. In other words, as crazy as it seems after its recent decline, I think it's easier to own, not trade, but own the stock of Nvidia than it is to own shares in any of the companies that depend on the fickle, feckless, torn, strapped, beleaguered, mercurial, arbitrary, confused, and clueless consumer.
Cramer mentioned a company called Pool Corp, which manufactures equipment for swimming pools. This company's stock plummeted after it said that sales had suffered because of weak consumer demand. And Cramer suggested that this data had a ripple effect across other consumer and housing-oriented stocks like Lowe's and Home Depot. But unlike these consumer-oriented companies, Nvidia's enterprise customers aren't lost easily. According to Cramer, the company's customers aren't likely to take business elsewhere, as they risk falling behind their peers on the cloud infrastructure front. He also added that Nvidia and its mega-cap peers that can pay cash aren't concerned with interest rates. Additionally, he said that Nvidia is a stock to own, not trade, and if you trade it, you end up missing out on terrific rebounds after dips that can only be considered buying opportunities. So, this is why Cramer is still bullish on Nvidia stock, and we have to agree with him here. This is a stock for the long term, as markets like generative AI and cloud are still growing rapidly. In fact, Bloomberg expects generative AI to become a $1.3 trillion market by 2032, while Precedence Research expects the cloud services market to hit $2.5 trillion by that same year. But these aren't the only reasons why Nvidia stock is a buy, as we still have more to talk about, and we're going to get right into it. Hello everyone, and welcome back to Investocracy.
Hello, I was wondering what you thought about SMCI stock. I've been buying it.
SMCI is like it's like an Nvidia, I don't know, times 7 or minus 7. It's just too hard. Why not just own Nvidia? It's less, much less a black bottle. Come on, are you kidding me?
Over the past few years, investors who wanted to profit off the AI boom have rushed to Nvidia stock, and for good reason. The company dominates the AI chip market, holding an 80% share thanks to the top performance of its AI GPUs. Nvidia's GPUs have the ability to handle multiple tasks simultaneously, making them the perfect match for the high speed needed in AI training, inferencing, and much more. This has resulted in explosive earnings growth for the company that once mainly served the video games industry. In recent quarters, revenue and net income both have climbed in the triple digits. This also has fueled the stock's performance, as it saw a boost of more than 500% over the past 3 years, and soared past $1,200 just a few weeks ago. Nvidia recently split its stock, and since then, the stock has traded between $120 and $135. But does this mean, especially if you balked at the tech giant's $1,000 plus price tag earlier, that now is the time to buy? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right, let's check in on Nvidia. It's actually moving higher this morning, gaining about 3.5%, recouping some of the losses that we've seen over the prior couple of trading days. The stock actually falling 7% yesterday, 13% overall from when after it briefly became the world's most valuable company earlier last week. So for more on this and where we head from here, we want to bring in Dan Flack, Neuberger Berman, Senior Research Analyst. Dan, it's great to talk to you. So when you take a look at some of the price action that we've seen surrounding Nvidia, lots of questions about whether or not maybe this is a start of some unraveling when it comes to the AI trade. But here we are today looking at gains 40 minutes into the trading day. What does that signal to you?
Good morning. I think Nvidia remains attractive with a 12 to 24-month horizon. Clearly, in the near term, I would expect the stock to remain volatile. The key longer term, though, is really this continued execution on their product cycles. You saw that with Hopper in the data center, Blackwell announcing Rubin for 2026. And so this execution on the product roadmap is really foundational to driving growth over the next couple of years. And the other important piece of the equation is really a vibrant ecosystem. They continue to attract developers who want to write and invest in the NVIDIA platform. And so we continue to like the name, but again, do expect it to remain volatile in the near term.
So if you're expecting it to be volatile in the near term, what kind of math and models should analysts, investors be looking at to suss out the degree of NVIDIA's success heading into the next quarterly earnings print here? Because I think there is a lot of confusion from the street about how to run the numbers on a company that is growing so quickly.
There are a number of factors when we model the company. We go through each one of their businesses. The most important one is the data center business, where you're seeing very, very strong demand for their systems Also, on the networking side, growth is very, very healthy there as well. And so you're trying to balance healthy demand with, of course, supply, which is constrained. Now, I expect the supply chain, NVIDIA and its partners, to continue to make progress on improving supply over the next several quarters. But that is a gating factor when thinking about the July quarter results, which will get announced later or in August. But the key is, if they're able to continue to execute on the product roadmap, I think estimates will move higher over the next 12 to 18 months, and that can help support the stock and drive out performance.
The fact that Nvidia managed to successfully transition from a company primarily serving video game companies to now focusing on AI customers is enough reason to be bullish on the company, as Nvidia quickly recognized the AI trend and its importance, and became the industry's leading player. Nvidia still brought in $2.6 billion in revenue from the gaming segment in the most recent quarter, but the company's data center segment far surpassed that, delivering a record of more than $22 billion in revenue. That's a total revenue of $26 billion. Nvidia's GPUs are the fastest on the market, and along with these powerful chips, Nvidia offers AI customers a wide variety of products and services. One of these is enterprise software, a sort of operating system for AI that streamlines, secures, and manages the deployment of AI projects. For example, Control Expert used NVIDIA AI Enterprise to create a system allowing insurers to process claims in one day, and customers can access NVIDIA's products and services across all public clouds, meaning it's very easy to find these top AI tools. Looking ahead, there are plenty of reasons to be optimistic about NVIDIA holding on to its leading position in the market. Despite the fact that rivals have doubled and are now bringing in new and high-performance chips to the market, NVIDIA can stay ahead as the company pledged to update its GPUs on an annual basis. This means it's very likely that, even if a rival releases a better chip, a few months later, NVIDIA's GPU update will keep it in the lead from a performance perspective. And NVIDIA is kicking off this promise with the launch of the Blackwell architecture and chip later this year, which is supposedly a game-changing platform that both investors and customers have been eagerly waiting for. In fact, the company said that demand for Blackwell has already surpassed supply, and it expects this to continue into next year. NVIDIA is also seeing incredible growth when it comes to its free cash flow and return on invested capital, which means that the company has enough resources to invest heavily in research and development or acquisitions, which will help it keep growing. So far, these investments have been bearing fruit. On top of this, it's important to remember that we're in the early days of the AI growth story, with the market expected to soar past $1 trillion later this decade. This suggests NVIDIA's momentum could continue as companies invest more and more in AI development. Therefore, with the new price tag well under $150, the stock is worth today's price. And if you hold on to a stock for the long term, short-term fluctuations in the price and valuation won't impact your returns by very much. So, to conclude, we can say that since it's trading for less than $150 a share, NVIDIA stock makes a top AI growth buy. But, what do you think about NVIDIA stock? Is it a buy at the current price? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation for NVIDIA is. If you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.